Hey folks, Kevin Mullen here with Mullen Associates. Want to give you a quick update after week one of tax season is over. Usually every tax season kind of has its own feel and its own flavor. There's usually things that crop up that are really important, that are different than other tax seasons. So the purpose of this is to just give you a little bit of insight. I think I've done probably 35 to 40 tax returns already this week. So we got keen insight on what's going on. First and foremost is there's a couple of rounds of letters that the IRS is sending out. Most people should be getting these. Now, they kind of tried this tactic with the stimulus payments last year, but they failed to send these out on time to most people. This time around, they're a little bit more on the ball. And so the first letter that I want to reference is your stimulus payments. Remember, there were 3 rounds of stimulus. One of those rounds of stimulus was actually passed and paid in 2021. So that one's actually going to go on this tax return that we're filing this year for 2021. These were $1,400 payments to everybody on your tax return. Remember, these ones weren't age locked like some of the two stimulus payments prior. And so this third stimulus was $1,400 for everybody. The letters that the IRS are sending out, though, are going to show that stimulus amount per spouse. So what that means is if you have a husband, a wife, and a child, they're going to take the $4,200 that you would have received and split that between husband and wife for $2,100 on each of those letters. This is actually going to be kind of difficult to deal with for divorce situations and new marriages and that kind of stuff. But for purposes of these letters, both of them are relevant. Some people are looking at it and thinking that it's a duplicate and only one matters, and that's not the case. So for Texas being a community property state, the IRS is splitting this between spouses. You need to make sure you include both of those letters. Also, and in a similar way, are the advanced child tax credit payments. So if you have qualifying children, starting in July of last year, you would have received, if you didn't opt out, you would have received some advanced payments of a tax credit. Those payments you have got to report on your tax return this year. If you don't, you're going to get jammed up with the IRS big time. So they've actually been pretty good at sending these letters out. Again, they're kind of on the ball with this one, believe it or not, surprisingly. And so you should have received these letters. These letters, again, for Texas residents, community property state rules, the IRS are splitting these between spouses. And so I've got people who are getting, a letter showing $1,650, and I just had a client yesterday who only sent me one of those letters when they thought it was a duplicate of the other letter. The reality is we need to take both and add them together. So really important that if you're getting these letters, you keep them, give them to your tax professional. It's going to be easy to get tripped up on your tax filing if you don't have these together. There is a way for you to go onto the IRS's website and log in using what they call a Your Portal to be able to get in and check these amounts, but that's on a per spouse basis. So if I logged into mine a couple of days ago just because I wanted to see what that looked like, and I only saw my share of it, and so my wife's login would have her share. So again, they're splitting everything down the middle. This is different than some of the letters last year, which were just straight to, a full amount straight to a family. And so that's going to be something that can trip you up really easy. The other piece that I wanted to mention is the way that they're handling the child tax credit this year. And it's complicated and I don't want to go all into it, but basically they're showing every single child tax credit as a refundable credit. Because it's a refundable credit, then it is part of the refund batch that the IRS will not send out until after February the 15th. So it'll probably be later into February, even if you filed really early. If you've got young kiddos on your tax return, that refund's going to be delayed. So don't expect anything until late February. If the second or third week of February come and you haven't got it yet, don't be surprised. It's probably going to take just a week or so longer. The last thing that I'll mention is if you're in Texas, that you are, last year, 2021, you were very likely subject to the February freezes. That freeze, if you incurred damage, is a federally declared disaster. Those losses were actually able to be claimed on the 2020 tax filing. But if you missed that window, or you didn't do it, or you forgot, or you deliberately wanted to delay, don't forget now on the 2021 tax return to make sure and pick up those losses. Generally speaking, you're really going to need to work with a competent tax advisor to get those losses claimed correctly. There's a specific FEMA code. There's some tricky stuff there. So make sure you're working with somebody who knows what they're doing. Of course, we're always taking new clients. We're happy to help you. And other than that, that's week one of tax season.